throw the spotlight on the cement space. This sector has been in focus ever since the get-go today, the beginning of the trading session. It's a couple of stocks in this pack, rather. Ambuja Cement, that stock is in focus as the ACC and Orient Cement merger gets a nod. The proposed consolidation is expected to be completed over the next year, and my colleague Ashesha is joining us with more details about what the share swap ratio is, how is this amalgamation going to take place. It's a big one at that. Ashesha.
Well, yes, big news that came in for the cement sector this morning, where ACC and Orient Cement will be amalgamated with Ambuja Cement, and the entire Ambuja Group of stocks and Adani Group of cement companies will now be housed under one company, and that is Ambuja Cement. The company will be issuing shares to public shareholders of both ACC and Orient. Shares held by Ambuja will stand cancelled, and all assets, liabilities and all arms will then be transferred to Ambuja Cement. So that's how the entire transaction is set to happen. Now, as a result of this, promoter shareholding is likely to come down from 67% currently to 60%. Sanghi and Penny merger, of course, are under process. That is likely to take some more time. But the merger, this particular transaction is likely to be completed over the next 12 months. That is what the management has stated in their press release. Let's also talk about the kind of benefits the company will enjoy. The company says that merger will create a pan-India cement powerhouse. That was the main reason they've gone ahead and merged all these Adani Group cement companies into one company now, and they aim for single consolidated single cement platform, which is likely to come into existence going forward. So that is the main objective behind this demerger. They will also enjoy synergies as a result of lower logistics costs that the company will enjoy, the expansion plans that the company has going forward, and it will also help them improve their margins by 100 rupees per ton. Remember, Ambuja currently earns about 1000 rupees per ton as EBITDA margins, and that is likely to inch higher as a result of synergetic gains that the companies will enjoy. Other than that, it will streamline their corporate structure, balance sheet position will get strengthened, and efficient capital allocation, that is another objective that the company intends to achieve as a result of this entire merger and amalgamation process that the company has announced. Now, let's also talk about what this will mean for the entire industry. Remember, there will be only two major cement players in the industry. Cement major UltraTech Cement, which will continue to be the market leader, which is aiming to reach capacity of 213 metric tons by FY27, and Ambuja is targeting 155 MTPA by FY28. So those are the capacity expansion plans that both these major companies are looking at. Let's also talk about what this means for shareholders of ACC and Orient. Now, for ACC, the current shareholding of 100 shares translates to about 1,77,000 odd rupees, and this is exactly the same for their shares that they will get in Ambuja. So there is no profit, no loss for ACC shareholders. But on the flip side, let's also talk about Orient, because they will tend to gain to the tune of 9 to 10% basis the current market price of both Orient and Ambuja. So shareholders of Orient will tend to gain. So that's how the entire transaction is set to happen. It is likely to be completed over the next 12 months, but definitely analysts believe that a major overhang is out of the way now that the corporate structure has been aligned, and because they are going to enjoy synergetic benefits, EBITDA margin for this company is likely to improve going forward.
Okay, so that's